Hello and welcome to PSM Speak. We see several banks around us. The scheduled commercial banks in the public sector, private sector, foreign banks, and we see banks in the cooperative sector, urban cooperative banks, rural cooperative banks, small finance banks, payment banks, so on and so forth. And among them are prominent, I should say, the regional rural banks. Today, in this video, let's try to understand what are the regional rural banks. What's their, starting from their advent, their growth, and the changes that are fast taking place in this sector, and all about them. Because they are in the rural area, because they are very important banks, and more so, they are completing their 50 years of existence. On this October 2, they are celebrating their golden jubilee, 50 years completion. So let's learn thoroughly about the regional rural banks. Everyone is interested, or should be, because it pertains to our rural areas, banking. And so are the students, those who are taking their competitive examinations like civil services, IAS and IPS. This subject is interesting to them also. So I request you to watch this fully, to know from beginning, and to get the notifications as and when I upload videos like this. You need to subscribe to this channel. As you know, subscription is free, but it greatly encourages me. Please subscribe to this channel. Now, regional rural banks. When were they set up? Through an ordinance in 1975. The regional rural banks were set up in 1975. It was through an ordinance, that is in September month, 26th of September. The government that time did not wait until the parliament meets and passes a law. The Regional Rural Banks Act, before the enactment, through the presidential, I'm stressing this because the urgency that was felt by the government of the time, that without waiting for the parliament to make an enactment, Regional Rural Banks Act, the regional rural banks were established. So that is how the importance of these banks was felt. But why? Let's look into that. So the ordinance was on 26 September, and then the act was Regional Rural Banks Act 1976. And the first batch of the banks on 2nd October 1975, 5 banks on a pilot basis were established at that time. The first among the 5 banks, or first among the regional rural banks, which subsequently their number grew to 196 before condensing them to the present number of 28 banks. That process let us try to understand, all right. First 5 banks. Prathama Gramin Bank in Moradabad in UP is the first ever regional rural bank. So now we have 28 regional rural banks and 26 states we have regional rural banks. 3 union territories, Puducherry, Jammu and Kashmir and Ladakh. Only 2 states do not have regional rural banks yet, and 5 union territories. Leaving these union territories, 5 union territories and then 2 states, we have regional rural banks across the country. Its length and breadth, 2,069 branches we have. We have also branches in urban and metropolitan centers, 1,766. Why the regional rural banks in urban and metropolitan areas? And we are calling them regional rural banks. Are they regional? Are they rural when we have this? These are the details that today we want to know. Why this is happening and what is happening to the regional rural banks. And before actually going to the time when the regional rural banks were established in 1975, let's first look at the historical facts which are very important, which led for the establishment of the regional rural banks in the form in which it was established with the goals that were given to them at the time of their establishment. To look at the history, during the British time, that government felt that the agriculture is important and support to agriculture through government lending important. Whatever be the colonial interests, this was one thing that it could not ignore. So the first ever act in this country was in 1883, the Land Improvement Loan Act under British rule. Subsequently, the British government brought in 1904 the first ever Cooperatives Act to set up the rural cooperatives for purveying credit to rural people, particularly to agriculture, for agriculture lending through cooperatives. The first ever Cooperative Acts was enacted in 1904. This was a central subject, but it was felt that it should be state subject. And this idea came when there was a lot of pressure on the British government, the agitation of the Indians for independence, pressure working on the British. They started feeling, you know the history, that they should bring the changes necessary to meet the aspirations of Indians. Then the reforms, Montague Chelmsford reforms. In those reforms, among several other things, it was recommended that the cooperative should be the state government subject. So, in 1919, the cooperative subject was transferred to the state governments, 1919 enactment. So, these are the early enactments. Then, after independence, the government of India naturally felt that agriculture is important. We can recall here the words of the first Prime Minister, Pandit Jawaharlal Nehru. What did he say? Anything can wait in this world, but not agriculture. Agriculture is important. For agriculture and its development, credit was treated as an important input. So how much credit, from what sources agriculture is getting? The Reserve Bank of India at that time appointed, this is first ever Rural Credit Survey. Rural Credit Survey, 1951-52. Direction on Rural Credit Survey, 1954-55. The survey and the committees appointed around that time recommended several things. Most important among them was related to rural credit. That committee recommended for the establishment of State Bank of India. Nationalizing the Imperial Bank, State Bank of India was established in 1955. The background is rural credit and rural development, economic development. And this bank, meeting its mandate, established a little more than 400 rural branches within 2-3 years. A little more than that, meeting the target or exceeding the target, it did it. But because Rural Credit Survey found that the existing institutions, the cooperatives, were not providing adequate credit to the farmers, neither the credit was adequate, nor was there efficient supply of it. the inefficiencies, compared to the enormous needs, ignorably small amount was given. Rest of it was coming. Where people 70% are more dependent on agriculture. But credit mostly 70-80% was coming, more than that, from traditional money lenders, informal sector, non-institutional sources. So the cooperatives did not do that. Was the idea. So the State Bank of India was established. Now, after observing these effects of these measures, the government felt subsequently that even after these measures like establishment of State Bank of India and the rural branches of State Bank of India, before that the cooperatives, measures to strengthen the cooperative credit structure even after independence, sufficient credit was not flowing to the rural areas. So something should be done. What is it that the government has done? 1967 appointed a National Credit Council to assess the credit needs in the rural areas, the priorities, the allocation of credit. It has examined and tried to coordinate. Then it was felt that the bank should be controlled. Already State Bank of India is in public sector, all right, but other private sector banks should be controlled by the government to tune them towards national goals in their credit deployment. For that social control, the social control was experimented in 1968. You see how it is developing. Pre-independence measures, cooperatives and Land Improvement Loan Act, then the Credit Survey, State Bank of India, National Credit Council, then the social control in 1968. It was felt soon that even this was also not effective. Banks in private sector, despite the governmental direction and control, no control because they are owned by the private sector, the credit was not flowing to the desired areas as desired by the government. So the government then felt that directly the government should control them. Government should nationalize them. Exactly that was done in 1969 when 14 banks were nationalized. Of course, in 1980, another 6 banks, 14 major banks, similarly another 6 big banks were nationalized, 1969 and 70. See the progress. Cooperatives, their strengthening, establishment of commercial banks and control over them, then social control, nationalization. Even after that, credit was not reaching to these farmers. Particularly, we often say farmers. Who are the farmers? Who are the actual tillers of the land? Small farmers, marginal farmers, agricultural laborers, tenant farmers who do not have much collateral to offer for a loan from a commercial bank, but who need credit very vitally for the development of the activity, for farming, and these small farmers, marginal farmers, agricultural laborers. Small and marginal farmers constitute more than 90% of the total land holding in this country even today. But they were not getting credit. So, a banking commission was appointed in 1972. Saraiya Commission, you know about that. This commission found that there should be a separate institution like a cooperative institution for rural credit. Although it did not say regional rural banks, the idea was that there should be a separate institution meet the credit requirements of the poor, rural poor, the small and marginal farmers. The small farmers were outside to a large extent. from the institutional credit arena. So, in 1975, a working group was appointed by the government under the chairpersonship of Mr. M. Narasimham. Yes, the same Narasimham was the chairperson of the banking reforms in 1990. But that time Narasimham was working with the government as the additional secretary in the Ministry of Finance. Under his chairmanship, the working group studied for about 30 days, 30 days, and came out with the recommendation to set up with a bank. That bank is Regional Rural Bank, Gramin Bank. In northern India, they call it Gramin Bank. In south, in Telangana, Andhra Pradesh, Gramina Bank. Other states suitable to their dialect, Grama Bank in one state, Gramya Bank in another state. In Kashmir, they call them Ilakai Dehati Banks, Regional Rural Bank. Whatever the name, a rural bank. A rural bank with its area of operation, 1 or 2 districts. The area should be homogeneous, agroclimatic area that facilitates the formulation of schemes, uniform schemes within the bank. So the size of bank is 1 district or 2 districts. That's how 196 banks in the country. And this bank in the central sector, it's not a cooperative bank. It's a scheduled commercial bank with 50% shareholding by Government of India. And that bank was supposed to run with the commercial bank's efficiency. It was suggested that it should imbue in it the good features of cooperatives and commercial banks while discarding the bad features of both, with the purpose to serve the weaker sections in the rural area. So a commercial bank was supposed to sponsor that. A sponsoring bank, its share is 35%. Because these banks are in the rural areas, the participation of state governments is also equally important. So state government were asked to contribute to the share statutorily. The enactment says 15%, 50% by the central government, 35% by a sponsor bank, and 15% by the state government wherever this bank is operating. This is the idea. Then what for this bank when all other banks were there? The history we know, the RRB enactment, the very preamble says, it defines the goals of regional rural bank. It came as a social bank and it specifically said, the preamble, a bank to cater to the needs of small farmers, marginal farmers, agricultural laborers, rural artisans, street vendors and hawkers kind of people, and all those inhabiting in the rural area below poverty line. An exclusive bank for the persons living below poverty line in rural areas. That was specifically mentioned in the preamble to the Regional Rural Banks Act. Living to these expectations, RRBs covered small marginal farmers and people living below poverty line in rural areas. Entire of RRB credit before reforms was for these sectors. This is the target group. This was the target group. It was sin to give loans to people above poverty line. If somebody was identified as a big farmer with holding above 5 acres or 2.5 acres marginal limits, whatever in given state, that was not allowed, prohibited, exclusively for weaker sections. The government felt only then was it possible for the entry of the deprived into the banking sector. So it lived up to this expectation. Supplied credit, ensured the generation of income and employment in the rural area through small and marginal farmers and weaker sections participation. But by providing cheap credit to a large number of people, although RRBs were supposed to be low-cost institutions, they incurred some losses. Not as if it was discovered subsequently after their functioning, but it was felt at the very formulation stage that the RRBs will incur some losses, and those losses should be treated as social cost for the social benefit of serving the rural poor. For generation of income and employment to them is the profit, not the commercial profit. But these goals were conveniently forgotten by 90s. After reforms, RRB reforms started in 92-93. When they have looked back, RRBs were sustaining losses. So, 173 regional rural banks out of 196 were incurring losses, and remaining 23 banks registered some profit. But the observation was that the losses of loss-making banks was further falling, deteriorating. So are the profits of the profit-making 23, 24, whatever the number. The number was dwindling. So something should be done. Various measures were brought in. That this target group finance won't work. Slowly, they should start financing to non-target group. And finally, the non-target group has become new target group. The RRBs are brought in terms of priority sector lending and other lending operations on a par with other commercial banks. So, some 10% technically it is enough if RRBs give loans to the poor. So see the transformation from 100% to 10%. Then the rates of interest. In some areas, unfortunately today, the rates of interest of RRBs, let's say in some banks I have seen that in the SHG loans, RRBs rates are higher than the other commercial banks. Gold loans. When no other loan is available, the rural poor, because they have some gold for cultural reason, everyone in this country has some gold. Gold loans rates are higher in the commercial banks because their mandate is you show profits. They have shown profits. How much profits have they earned last year, 2024-25? 7,571 crore. And to achieve economies to the scale, 2004, they felt that the RRB should be merged together, amalgamated. It was experimented in different phases, and finally, one bank in one state. That's how we have only 28 RRBs instead of 196. The branches that time were around 14,000. All right, now the number of branches has increased to 22,069. And 92% of the branches, fortunately, are still in the rural areas and semi-urban areas. 8% or so in the metropolitan areas. So in the beginning, we questioned why in urban areas. The RRB's ethos, culture was that it should be in rural areas, but the changed priorities made them move to urban centers and metropolitan centers. Not only that, their funds deployment also. The credit deposit ratio, they are mobilizing some 100 rupees in rural area. More than 100 rupees was given as credit. CD ratio was more than 100%. Then how was it possible, you may ask? They borrow from NABARD and other refinance agencies and all that. More than the deposit because of the protection from the government and all that. CD ratio was more than 100. Now it is 71. That is considered to be the highest in 33 years. More than that, we are talking that urban interest of the RRB deposits, close to 50% are invested in securities and shares, SLR and non-SLR investments. The money is not flowed back, they are brought to the central money market, to the urban areas through the shares and securities market. So now see the U-turn. Urban areas we have bank, deposits are coming to urban centers, 50% ID ratio, 50% ID ratio, and CD ratio is 71%. And business levels, RRB business deposits, the latest figure that last year's 6.6 lakh crore and the deposits 4.7 lakh crore. Together, more than 11 lakh crore is a big sum, all right, but their deposits and advances about 2 to 3% of total scheduled commercial banks deposits. Also, their branches are 14% of the commercial bank branches, but the rural branches of commercial banks compared with them, RRB's rural branches, not entire of RRB branches. So RRB's rural branches are 20%. So this data prima facie is misleading that their business is low. No, SHG's RRB's single largest chunk, 30%, more than 30%. Then Jan Dhan account. There are accounts, Jan Dhan account, Jan accounts, but there is no Dhan in them in other banks. It is there. Not that every account is zero account, but in RRBs, we find more money in Jan Dhan accounts, so they are doing real service there. Then, in terms of money, it may be low, 2 to 3%, but in terms of number of accounts served, RRBs are proportionately high. The per capita loan or deposit is low. What does it indicate? It is serving more number of people. To be clearer, let's say 100 rupees you are lending to one person, one account. Lending to 10 persons, 10 rupees each, amount is small. Amount is small, which means small persons you are lending for 10 accounts. So RRB's number of accounts are more. Per capita deposits less. Per capita advances less. Even today, despite all these measures, the reason, it is the culture. That is the culture of RRBs. RRB employees. They are biased. They are biased towards small farmers, marginal farmers, rural poor. These are in their heart. RRB employees, because of their service, their preference for the poor, despite these regulations, RRBs are helping the poor more than the other banks, even today. But now, government is not stopping here. What is it going to do? The share capital, central government 50%, 35% is that of the sponsor banks, together 85%. The change in law, RRB Act amended, as per the amendment, 51% is limited to the central government and sponsor bank together instead of 85%. Central government 50% and another public sector bank. 35, 50, 85% is predominant role by the public sector, the government, and the state government 15. So totally it is a government bank. Instead, now it is limiting to, it should not fall below 51, which means it can bring it down to 51%, the holding of central government and sponsor bank together. The remaining, it can source from the market, that means private investment. In consultation with state governments and all that, wherever state governments is coming down, which means it has opened doors through the amendment to bring money. So where are the RRBs going now? consolidated, they made them state level banks, but privatization. Whereas the demand is national rural bank to serve the rural people under NABARD's control also. Instead, where is it going when it is making it private with private capital? And then the idea is also merger out because RRBs have become more commercial than the most commercial banks now. The rates of interest high and they are not catering to the people who were to be catered as per the original enactment and the very purpose of the regional rural banks. Then there are people who argue that where is the need? There is no low cost. RRB is not running on low cost as it used to be that time. Maybe if you look at the cost ratios, the costs of RRB definitely are low, is all right, but yet that original concept is no more seen. So neither it is low cost, nor regional, nor rural, and not social. It has become a commercial bank. Why shouldn't we merge with the commercial bank is also an idea. So finally, whatever the shape that it is taking, it amounts to its state without mincing words, killing the regional rural banks. The regional rural banks of India, there's no comparison in the world. Bangla Bank or any other bank, if you look closely, the services that they render to the small and marginal farmers and weaker sections, cheap credit, easy credit, most convenient credit, that was possible only through regional rural banks. Instead of strengthening these goals, still there is need of purveying credit, institutional credit. So ignoring all those needs and moving away from the establishment goals, already they have moved. Is it not wrong? It is for you to decide after knowing all these facts whether what government is doing right or not. What is good in the public interest? What is good in the interest of the people in the rural areas? What is best in the interest of the small farmers, marginal farmers, and the poor in the rural areas? Is for you to decide. Thank you so much for so patiently watching this video, and I hope you have subscribed to this channel already. If you haven't done it, please do subscribe, and subscription, as you know, is free. You will get the notification as and when I upload another video on similar topic, and don't forget to leave your comments in the comments box and click the like button. Thank you.